Join us to get exclusive and rare access to some of the industry's best leaders. Leaders who will share all their secrets to success with you. Leaders who have closed thousands of successful deals between them, generating hundreds of billions of dollars. And leaders giving you the roadmap to fast track your career and reach the highest echelons of the business. So welcome to the Investment Banking Leaders Podcast, and best of luck on your growth journey. So we have another top guest for you all today. I'm super excited to be joined by Piers Ronan, Managing Director and Head of DCM Syndicate at Truist Securities in New York. And when it comes to debt, there's no one more knowledgeable than Piers, having developed a deep expertise over his 20-year career. So Piers began his career in London with National Australia Bank, where he built up knowledge on the Australian debt market before taking up a role at Credit Suisse in asset finance and structured credit. Here he honed his skills in derivatives, securitization, and structured funding. And in total, Piers spent 17 years at Credit Suisse, moving to DCM Syndicate back in 2011. His team were the true pioneers, I should say, of Contingent capital instruments, and he relocated from London to New York back in 2020. In his current role, Piers is leading an exciting growth phase at Truist, where they're taking market share at a rapid rate. So having worked on different continents, created opportunities from a financial crash, pioneered new instruments, and led successful teams. And on top of this, getting to know Piers, he's passionate about helping others grow and develop, as well as build resilience. So lucky to have him on the show with us today, and I'm super excited to get into it. So welcome to the Investment Banking Leaders Podcast, Piers, and thanks for joining us.
Thank you, Pete, and thanks for that kind introduction. It's great to see you.
Lovely. Long time in the making, so I'm excited to get into this. Why don't you start introducing Truist and what you do for your clients?
Yeah, sure. So Truist is a relatively new brand in the banking market. It was formed in December 2019, and it was the merger between two U.S. regional banks. One was called SunTrust, and the other was called BB&T. Now, SunTrust always had an investment bank. SunTrust Robinson Humphrey was the brand. That was something that was focused more on the middle market, and particularly regionally within the southeastern states of the U.S., which of course is a huge growth market. Right? And that's the Sun Belt. That's where we've seen population growth and economic growth over the past several years. When the two banks merged, they became a big bank, right? We're over $500 billion in balance sheet. And so that meant that we were able to upscale the clients that we bank so that we retained what SunTrust Robinson Humphrey used to do, but we've gotten into more big, large cap names. And we really have a full service investment bank, right? So we have all of the product verticals that you think of when you think about investment banking: mergers and acquisitions, equity capital markets, debt capital markets, leverage finance, sales and trading, and so on. So we combine all that, scaled up, as I said, $500 billion now and continuing to grow. And the resources that we are getting as a business are tremendous. So if I think about growth stories in investment banking globally, there are a lot of firms that will tell you that they plan to grow. This one is really putting its money where its mouth is. And Truist, I think, is one of the true growth stories in the industry.
Amazing. Thanks for sharing that. And exciting times. And I can see why your team's been taking market share as well. So great to see, and congrats on that good work. Keep it going.
Thank you.
Why don't you tell the listeners something interesting and unknown about you before we jump into the meat of today's conversation?
Interesting and unknown. So I'll tell you something that I don't think came up in our discussion prior to this, but I did, when I was in my early 30s, start getting into triathlon. And when I started doing triathlons, I remember hearing about the Ironman, which I thought sounded completely absurd. Why would anybody want to do that? And how on earth could you run a marathon at the end of a day of exercise? But gradually I built up to it, and I did 3 of those and really enjoyed it. So it's one of those things. It's like, how do you eat a Subway sandwich one bite at a time? And you just grow from doing small triathlons to middle distance and eventually the long ones. And that's a really fun thing to do. So I encourage anyone listening to try that sport out.
That's amazing. 3 times an Ironman. That's pretty special. And I've had an interest in it. I haven't quite got there yet. Maybe I'll take some training schedules off you and learn a little bit about how to take those small bites one at a time.
Oh, we can go for a run next time I'm in London.
Lovely. Let's do that. Okay. So I know very early in your career, you spent some time in the RAF, and I wondered what you feel that time in the RAF taught you and how it's helped, if it has helped in your career.
Yeah. So my episode with the RAF was during university. So it was as a pilot cadet rather than a sort of full member of the RAF. Being in a military environment I think is a fantastic thing, something that everybody should have the opportunity to do, really, because the military teaches you discipline and a respect for tradition. There's great camaraderie. Being a pilot cadet is a lot of attention to detail as well. They're very big on detail when it comes to operating aircraft. So there's a lot to be said for military exposure. We actually, I think most employers, this is not a banking thing or a Truist thing. I think most employers really value the experience that people gain from the military. And in fact, we actually are hiring a West Point graduate who's starting with us next week. And I'm really excited to have him join. Can be really confident when we hire from that background that we're going to get quality because people have been well trained.
Love that. And I can definitely see how those skills are transferable and stand you in good stead in any career that you may take. So thanks for sharing that. I want to hone in on some of the really interesting parts about your journey and about your career. Particularly, I think I want to start with that transition from the UK to the US. We've recorded with guests in 6 or 7 different countries, but rarely talk about that transition. So keen to know how you managed that transition successfully.
Yeah, when we talk about transition, whether it is from one jurisdiction to another or from one industry group to another, if you're thinking about investment banking, or from one product to another, I think that the sort of challenges and the way to tackle those are similar. One is you have to, and this is more true at a senior level, but I think it's true for everyone, you have to develop a relevant memory. I mean, like a synthetic memory. Okay. So what I mean by that is if you show up cold in a new jurisdiction or a new industry and you don't know any of the history of what has happened to the clients, how those companies have been formed, the deals that they've done, then you don't really have the context to cover those clients and to do business in that jurisdiction or that industry. So you need to read a lot about what's happened in the past and internalize that. And I use the term synthetic memory. I remember working with a guy, relatively young guy, and you would ask him about things and then realize after you'd ask the question, wait, no, he wouldn't have been around when that happened, but he would know, and he would talk to you about a transaction as if he had done it himself, but it happened before his career. So he had done a tremendous job of that. It's a challenging thing to do. It's time consuming, but that's what you need to do. The other thing, in addition to building memories, building a network. Okay. I was in the UK for 16 years of my career, something like that. I had a great network throughout the European market. I didn't have such a good network in the US. And so you have to build that really rapidly. And you don't have the benefit of growing up with people from the graduate training program and so on. So you need to put in a little bit more time and effort to go and meet people and build relationships quickly. Yeah. Building memory, building network. And then I was really happy to find a steep learning curve, right? So even though I wasn't really changing roles, particularly, I was just changing jurisdictions, things are different. And so it's a challenge and we should all embrace learning curves. I love learning new things. So that's a good thing, but also it's a reminder that what we do is not that easy. And there's a reason why it's a tough industry. And you're reminded of that when you have to make changes and learn new things. And I think I'm grateful for that.
I think growth mindset always stands you in good stead, right? And I love the synthetic memory approach that you mentioned and getting that context and history. I can understand why that's so important then to build a successful network of clients. You talked about network. It comes up again and again. To be a great leader, to be a good investment banker, network is obviously a really important and critical factor. Any advice or extra tips around how to build a network rapidly or how you built it over there, really started from zero?
Yeah, it's building a network is just reaching out for people and making time after work to go and get a drink, meet people for coffee. It's putting the time in. For the most part, people are happy to meet with you and get to know you if you just ask. And that's especially true when people are in a new role themselves. So this is flipping the script a little bit and looking at it the other way. I've had clients who I remember clients in the UK who would move to the UK from another jurisdiction, put in the first call, introduce yourself, offer to take them out. They really remember that, right? The impact that you can have on somebody early in their career or early in their new position is much greater than the impact in terms of relationship building that you can have if you show up 6 months or a year later where they've already met everybody and they're not necessarily going to remember you. I think there's a lot to be said for getting in early with people when people have been promoted or have a new job or new in town and getting to know them early. You become much more memorable and relevant to that person than if you're the 12th person that they've met.
That's great. Great insight. Yeah, I can definitely see how getting in earlier and building the relationship from the ground up would help there. So yeah, thanks for sharing that. And what about differences between finance in the US and UK? What are the differences in your perspective?
There are differences, definitely. I think some people would tell you that it's basically all the same, right? If we're talking about the West, but some people would tell you it's totally different. And I don't think either of those perspectives is wrong. It's just a case of what are you focused on? What is your perspective? So if I think about in my own work, what the big differences are between working in the US and working in the UK, I break it down into three things. One is scale. The US market is just bigger than the European market, no matter what product you look at. And the companies in the US are bigger companies than in Europe as well. So the scale is different. The standardization in the US has a lot more standardization when it comes to how we operate and the products that we deal with. And that's because there is not a patchwork of different jurisdictions. There's just one country that you're dealing with, one language. If you think about Europe, sometimes you have to split up the coverage by region or by sector or both. In the US, it's obviously just by sector. You don't do any regional splits. And so some of the best practices and know-how are more uniform, if that makes sense, in the US. So you have standardization, this way of doing things, reluctance to ever reinvent the wheel. That's not to say that people in the US are not creative in parts of the market. They certainly are. We can come on to that in a second. But in Europe, there's more of a need to reinvent the wheel because you don't have the same consistency of deal flow. And so there's often more sort of innovation and creativity is called for, which is a good thing, a positive thing about Europe. So that's the standardization angle. And then the third one is regulation. So this is similar in the sense that in the US, you have one set of regulators, obviously not one regulator. There's a lot of regulators that weigh in on different aspects of the financial markets. Whereas in Europe, you're dealing with different regulators in different jurisdictions and a real desire and willingness, I think, in Europe to continually evolve regulation. I'm thinking a lot about bank regulation when I say that, because I've worked in the market for banks. In the US, you often get, you do get changes in regulation, but I think the pace is much slower and less dramatic. So regulation is more complex in Europe in that regard.
Interesting. Thanks for the insights. Scale, standardization, regulation. And I hear a lot about the need for creativity in investment banking day to day, transactions, finding ways to get deals done. Did you find that what you learned in Europe coming into the US then, because you've maybe built up a bit more creativity or innovation, that it helped you in the US? Is that fair to say?
That's definitely fair. And that's not just my experience. I've heard that before from other people. In Europe, there's a certain need to start from first principles, often when you're doing something, rather than sort of a boilerplate way of doing things. And that way of thinking benefits you in any line of business, anywhere. And so it's a great training ground. Europe is a great training ground in that regard. US is a great training ground for getting more reps in than Europe, but they both have their benefits.
Amazing. Thanks for the insight. Yeah, as I say, really interesting topic. And I shared in the introduction, your journey, one of the big parts of it, or a unique part of it, was you were the pioneer or part of a team that pioneered those contingent capital instruments. Can you tell us a little bit about that and how that played out?
Yeah, I like that question because you're giving me the opportunity to tell a story, which I think is a really important part of relatively recent financial history. Right. So this goes back to Lehman Brothers, as many things do. And when Lehman Brothers went down that weekend, a lot of banks got together in the New York Fed and they decided whether or not they were going to come up with some kind of rescue package, private sector rescue. For Lehman, obviously that didn't happen. And we all know how it turned out. But about 15 months later, there was an article, a guest article in The Economist. It was written by two senior Credit Suisse executives. And they coined a term bail-in. Rather than having bailed out Lehman Brothers, what we could have done is bail them in. And what they meant by that is that if all of the creditors of Lehman Brothers had agreed to a haircut on their debt, just get back 95 cents on the dollar, 90 cents on the dollar, whatever it might have been, then Lehman would have been recapitalized through that process. And all the counterparties to Lehman Brothers would have lost less money, at least initially, and there wouldn't have been the financial tsunami that there was. So this term bail-in was coined. One of those two men that wrote that article spent the next several years of his life on the road talking to regulators, trying to get that built into regulation globally. What I mean when I say that is the idea that a bank can continue as a going concern while writing down some of its liabilities, and that would be built into regulation. 2 months after that article was written, it was January 2010. In March 2010, Dutch bank called Rabobank issued a bond called Senior Contingent Note, SCN. It was a Credit Suisse at the time. We were a book runner on that deal, which designed that deal with them. And the way that bond worked is that if Rabobank's equity tier one ratio dropped below a certain threshold, 75% of the debt would be written down. Now, Rabobank didn't get any regulatory benefit for this at all at the time. They did it just to demonstrate that it could be done, create a precedent for the industry, create a sort of a new market for a new type of instrument. Deal went very well. And that is one of the things. I wasn't in the group at the time. I was doing my sort of structured credit and securitization work. That was one of the things that attracted me to get back into debt capital markets in 2010, because I could see how interesting it was becoming with these new developments around bail-in. And from there, from that Rabobank deal, we did a number of tier one capital transactions that had the same feature. And then a couple of years later, it got built into European regulation. And since then, all banks in Europe have been issuing in that format. They've had to, because that's what the instrument is designed to be. That bail-in concept also made it to senior debt globally, but in Europe that required, I won't get into the details of why, but the nature of the way that the banking system works in Europe, it required a new instrument. So something called non-preferred senior was developed in the intervening years and has now become a sort of major part of the capital markets as well. So it was more than 10-year journey getting from that first article coining the term bail-in to where we are today.
Amazing. Thanks for sharing the story.
Yeah. And I was fortunate to just be at the forefront of that and executing a lot of those deals and a lot of market firsts, which is a really fun thing to do, because it's more interesting to talk about developing a product with clients than it is just to talk about the day-to-day goings on in the market.
I can imagine. Exciting time, innovative time, as you said, creativity needed, and what a great piece of history, debt history. So heard a lot about Lehman, but really appreciate your insights particularly. And obviously touched on Lehman, financial crisis. I'm always interested about those who have lived through it. What was the key to getting through that challenging period? And more importantly, especially from yourself as a growth mindset, what did you learn from that period?
Yeah, it was a tough period, but also a really exciting one. And ironically, Credit Suisse is a bank that has since failed, but it was actually a very strong bank in the immediate aftermath of the financial crisis, but not immune from a lot of trouble. So in the securitization business that I worked in at the time, we suffered a 1-day 75% headcount reduction. All right. So 3 out of 4 people left the firm in a single day. That was tough.
Wow.
At the time, I was working on a big deal. And if you think about the financial crisis, what comes to mind? It's banks were in trouble initially. Mortgages caused it. A mortgage bank in the UK that was in trouble, that had a liquidity issue. And the deal was that we were basically coming up with £5 billion of funding for them through a sort of innovative structure that we were putting together. And I was the junior at the time, holding the pen on that and getting the approvals and the credit approvals to take on a lot of risk. We syndicated a lot of that risk out, but it was an extremely important and exciting deal to be working on. So that was early in the financial crisis, before Lehman Brothers, but when things were very bad. People in the UK might remember pictures on the TV of lines forming around Northern Rock branches. That was going on. After that, worked for the UK government in an advisory capacity on something called the Asset Protection Scheme, which was a synthetic risk transfer from the banks to the government. Synthetic risk transfer or significant risk transfer, SRT, is a popular product that has grown tremendously since that time in Europe and now is growing in the US and is a buzzword within the private credit environment. So we did an enormous deal where the UK government basically provided protection to all the banks to improve their capital ratios. And then I developed my own sort of niche in a product called balance guaranteed swaps, which led to a lot of great deals, including one where I was an associate at the time. I cold called the chief executive officer of a former Lehman Brothers subsidiary. And I said, I can solve your derivative issue. We can come in and step into your balance guaranteed swaps. And it turned out to be an enormous deal that actually had a major impact on the P&L for the whole trading floor that year. So it was a very exciting time from that perspective. And you asked, what did I learn? And in addition to all the technical things that I learned, because I was doing new stuff, and as an associate, it's like being a baby, right? Your mind is really a sponge. You're learning all kinds of stuff, and it's a great time to try new things. I think I learned the value of entrepreneurialism and creativity in the investment banking industry, which kind of comes back to some of the things that I've talked about in the past few minutes about creating new products, creating new ways of doing things is a valuable skill and something that I think most people aspire to in their career. because it's just more interesting that way and more fun.
Amazing. Again, lots of stories there, lots of it.
Yeah.
Exciting. And it's interesting how you spoke about the crisis and almost as an exciting time in some ways for you in terms of your career. And I've heard that from other leaders. And I think being able to harness those challenges and reap the opportunities that they bring and learn and grow from them and prepare you for the next one is so important. So I really feel that in how you explained it for yourself. And you touched on Credit Suisse. I can imagine it was a really hard period a year or so ago, having spent a large portion of your career there. But what was it like seeing the collapse of the firm from the inside?
It was sad, right? It's like the old adage or the old joke, how did you go bankrupt, right? Slowly and then quickly.
Mhm.
And Credit Suisse was leading for a long time. People thought that it would survive, and then one day it didn't. But a lot of good comes from that too. And this is, I think, important for anyone who works in the industry. You have to be able to embrace volatility and chaos because it comes around from time to time. It always does, right? The markets are never smooth sailing for long. So if I think about benefits from what happened at Credit Suisse, number one is got the thinking cap on again, right? And a friend of mine at the firm and I were working together on a solution for this, for how First Boston, because First Boston was going to come back to life. That was part of what was going on, how First Boston might be able to rent balance sheet from Credit Suisse on a long-term basis in a way that really fulfilled goals for both Credit Suisse and First Boston. So we were working on a pitch that we could take to both First Boston management and Credit Suisse management. That never happened because one weekend it was just over. But the other good things that came out of that is the network that you have within your firm is obviously fantastic. And that network has now been spread far and wide across global Wall Street. So I know people in every firm, every jurisdiction who used to be colleagues. And I think that if you talk to people who were at Lehman Brothers at the time, they'll say that network from Lehman is extremely strong. I think the same thing is true of Credit Suisse. When you serve lemons, you make lemonade, or I pick your adage. There are definitely silver linings to what happened. And the other fantastic outcome is what I'm doing now at Truist. And I talked about Truist at the top of the show. And it's just a great opportunity to be in an environment where we are really growing. Everybody's pulling in the same direction. We're playing offense. And this firm is an exciting place to be. And on that note, if anybody listening is considering joining Truist, I couldn't be more encouraging.
Love how positive you are. You've obviously landed on your feet. And again, lots of excitement around what you, the team and the firm is doing, which is great. And I love your take there, the fact that the network of people you have are probably quite bonded by that experience and that challenge that you all went through. And now, as you say, wide across Wall Street and those relationships strengthen. So yeah, really, really interesting take on that.
Human relationships, I think, are strongest when they're formed in the trenches. So when you have that kind of war zone mentality, I think that can be a real positive.
Amazing. And are there any specific leadership lessons that you take away from what happened at CS or the financial crisis? Given we're in a leadership podcast, just wondering if there's anything you particularly tie to leadership.
To be a leader in this industry or in any industry for that matter, you have to be resilient, right? Resilience is something that I think is just critical because it's critical to your own survival. But if you're a leader, it's critical to the people around you as well. If you break down, they're going to break down. So resilience is, I think, the most important. The other thing, as you sort of become more senior and take on a leadership position, is perspective. So when you have a task to do, you can be myopic around that task and do it very well. As you become a leader, you need to see above the trees, if that makes sense. And so perspective is important. And I think when these things happen, like the financial crisis or Credit Suisse going down, they give you a great deal of perspective. They force you to think about things that you wouldn't otherwise think about, both in life and in work. So these are the two main things. When you ask about leadership, it does actually make me think about a tool that I have seen some other people use as they're developing their leadership skills. So let me get into that for a minute, because this is something that I hesitate to provide as advice, but I'm going to describe what I've seen people do, which has worked for certain people. And I think is a somewhat tricky strategy to execute well. But I've had colleagues who decide that they want to have an opinion on everything that's going on. Okay. This means that they overhear people talking about deals that they're working on, things that the people are not involved in themselves, and they offer their opinion on it. This can be incredibly annoying to the people who are receiving the unsolicited opinion, but it does something tremendous for the people offering the opinion, which is it's forcing them to think about things that are not necessarily on their plate. And it's forcing them to gain that perspective that I was just talking about, to look beyond their own tasks, which is important if you are going to become a manager or leader of a business, because you need to see across everything that's going on. The other reason why this kind of strategy, this tool of really paying attention to other things that are going on and then going and offering your opinion on it is good, is because if your opinion is a good one, people will appreciate that and you'll gain visibility. And if you do that enough and your opinion is valued enough, it can become a sort of a gating item, right? What are we going to do? Let's ask Pete, right? Let's make this decision. We can't make this decision without Pete's blessing. We have to go and talk to Pete. And Pete, you then become a kind of go-to guy. So it's a great tool if executed well. The reason I'm hesitant about giving this as advice is because, one, you can annoy your colleagues and you don't want to. Colleagues can be your future managers. They can be future clients. They can be in a position to hire you one day. They can be in a position to introduce you to other clients. They can be in a position to give you advice. So you don't really want to alienate them. Also, if you're offering opinions on stuff that you're not working on, they might be dumb opinions. Right? So you might look like an idiot, which is not good. And then thirdly, if you're doing that, what are you not doing? Because you probably have your own work to be getting on with. And if you spend all your time thinking about what other people are doing, you might be neglecting your own work. So there's a lot of downsides to the strategy, but I think when you ask about leadership and I think about how to get from a junior level to a senior level, paying attention to what's going on around you and thinking about it to the point where you can offer some value and offer an opinion is an incredibly useful tool in terms of that development.
Yeah, really interesting take. Not heard it before. And I guess, as you say, it is a fine line between getting it right and getting it very wrong. But I
you
like
can
it.
imagine,
And again,
Pete, I talk about this tool thinking about very specific individuals and what they've done. But when I think about those individuals, it's worked for them. It's an interesting tool.
Interesting take. And what else? Any other advice that you have for aspiring leaders to really make it to the top of the industry?
I remember Dad taught me how to drive and got on the highway for the first time. And he said, now look as far down the road as you can see. And this very important advice, I think, for you get the same type of advice in any type of sport, right? Learning how to ride a bike or be on a skateboard. You look down at the ground, that's where you're going. You look up, you look where you're going, you look ahead. And so you need to have this vision of what you want the business to be, what you want the world to be like. You need to use your imagination to picture what the destination looks like and say, if I had a magic wand, what would I do to this business today? What would it be like? Okay, let me have that as my guiding light. And everything that I do, I want to be moving in that direction. It might take a long time, but I know where I'm going. And I think that one of the very controversial, but great leaders of our generation and probably even plus or minus a generation is Elon Musk. And if you think about how Elon Musk has run his businesses, he has been on the brink of failure and still just had this vision of what the company is going to be 5 years from now and plowed on. And he's been able to sell that vision, get the financing that he needs to not fail tomorrow. So he's been able to pitch it, which is an important, you have to have the vision. You also have to be able to pitch it well. And I think that is a incredibly important skill for leadership and one that everybody needs to develop.
Interesting. And you say you're creating that vision. Is that something you do with a mentor, with people above? Is it more of a lone task? Like, how do you see that?
I think any of the above, right? Whatever works for you. Mentorship. I've never had formal mentors. I've had informal mentors a lot, and they can be hugely valuable. And I think just sometimes getting into your own head and thinking about what you want things to be like makes the most sense. So it depends on the person.
Perfect. And then other skills, got the vision part, talked about being valuable, listening to what's going on around you, being able to have a valuable input. Any other skills that you see that particularly make you a great investment banking?
Motivating others. Right? When people are motivated, they do their best work. Motivation, I think, can be difficult, but you're in that business, Pete, right? You are commemorating deals with the products that you make. And that is, I think, one of the tools and an important one in terms of how you motivate people, right? And celebrate success. So it's about celebrating success and it's about sharing that vision that I talked about with people so that they realize why they're doing the work. What is the destination? Where are we going? And I guess the other thing that really motivates people is just caring, paying attention to people.
Yeah, nice. Simple in some of those ones, but so important, I think, to getting it right and
having a team that believes in you. Okay, thanks for sharing that. I want to flip the switch a little bit onto opportunities and challenges. So what do you think are the biggest opportunities available for leaders in the industry today?
The world is always changing. I think that the world is probably changing more rapidly thanks to technology and the internet than it used to. And when things are changing, that's when you can develop things. So as a leader, the opportunity is really to change with the times, right? If you have a lot of inertia in your business, there's not much that you can do, or it's much more challenging to change the nature of your business when it's surrounded by inertia. But we're in an environment now where the world is changing quickly. And I think that's an opportunity to make changes to your business if that's what you're seeking to do. Most leaders do want to move things forward rather than just maintain the status quo. More specifically, technology is changing rapidly, right? We have the sort of dawn of AI. So that creates opportunities. And secondly, demographics. Demographics are always in flux, but we're going through this major generational change where the baby boomers are retiring and Gen X and millennials are taking their place. And so you have this big wealth transfer. And I'm talking about this in the context of finance because it's an investment banking podcast. I think the person who's really shining the most light on this is Mark Rowan, the CEO of Apollo. He talks a lot about how Apollo is growing on the back of managing money for individuals and the retirement products that they sell and so on. So it's really about harnessing the demographic changes to benefit the structural growth of that business. And I think that's an opportunity, not just for them, but for all firms to think about how they can grow, how they can set a business up to benefit from demographic change and how technology, coming back to that point, how they can use technology to accelerate that change and to be more efficient, more insightful, and so on.
Smart. I like that. I hadn't heard much in previous interviews about that demographic change, but it makes a lot of sense. And I can see why if you're able to harness that, then you can have a pretty powerful element to growth. On AI, anything particular that you're already seeing in that area that's having an impact on the industry?
It's sneaky. It's creeping in gradually. The short answer is no major change, but tools that we already use are sometimes becoming enhanced with AI, right? I spend my day logged into Bloomberg. I use Bloomberg for a lot of what I do. And those tools are always improving. And AI is a part of some of the latest improvements in that. And I think will definitely continue to be in the years to come. So yes, AI is creeping in, but there hasn't been major wholesale change in the way we do things at this stage.
Perfect. Thanks. And the other part of that question was really the challenges. What are the biggest challenges for leaders today in the industry that you see?
I think most challenges for leaders are timeless. They've always been challenges, right? Motivating people, forming that vision, staying motivated yourself, all of these things. When I say staying motivated yourself, actually what I mean by that is maintaining a demeanor and an attitude that keeps your troops motivated. So it's sort of part of the same point. Nowadays, if I wanted to pick out things that I think are more new, this is more about sort of corporate CEOs than all leaders, but I think it applies to everybody. There is pressure for people to take positions on controversial issues and to have a position on the issue. That can be a very dangerous thing to do because you might end up alienating half of the country, half of the demographic that you're focused on. So the best advice to leaders in that respect is don't take a position, I think, but that can be a challenge in itself. And then we just talked about technological change. Technological change is an opportunity, but it's also going to create huge challenges because if your competitor implements technology in a way that gives them an advantage and you don't, you're in trouble. So this is going to create a lot of issues for that. It will create the haves and the have-nots. And so for leaders, it's making sure that you figure out how to be in the group of haves rather than the have-nots.
It's definitely interesting and a tough topic, quite challenging because things are changing. How do you stay ahead of it? How do you learn what you need to learn? How do you deal with some of the challenges it brings? So I think that's a huge challenge that we'll see for many leaders as the years go on and AI and technology progresses further. I want to touch on resilience because you've mentioned it a few times and getting to know you, I know that as an area you thought was really important. So any tips on how you can best build resilience?
Oh, that's an interesting question. I know you got young kids and I have even younger kids. And I think about that a lot in terms of how do you equip these children with resilience from the get-go? It's a tough question, but I think you build resilience from failure. You get a lot of people giving you advice saying, don't be afraid to fail. There was a version of this that I heard recently, which made me smile. It was somebody talking about how they do things really quickly. And they said, the reason I succeed is because by the time somebody else has tried this, I've already failed 10 times. And I'm on my 11th iteration and it worked. And so don't be afraid to fail. Recognize that when you fail, there's a learning benefit from that. Take the learning benefit, take that as the win. I think that's an important component of building resilience. And then have perspective. All of us who are working in this industry are very lucky to be in the position that we are in. And I think get out and look at the entire world and you recognize and appreciate that, then that's helpful in terms of not getting bogged down on this went wrong or that went wrong. It's all terrible. It's not terrible, right? Things go bad, you learn, you pick yourself up and you move on. And you just have to have that mindset and continuously train yourself to think that way.
Yeah, I think you're spot on. And as you said, I have young kids and my oldest is now 8. And we talk a lot about what you learn from the challenges, what you learn from mistakes, from failure, from what happens. And I think if you can really carry that through and build that mentality, that mindset, then not a lot can hold you back, right? And again, you've covered it a few times already with the challenges you face throughout your career and how they've led to positive moments and opportunities. And I hear that again and again from successful leaders. So it's clearly that mindset, resilience is a key component to what long-term success in the industry looks like. So thanks for sharing your insight in that area. I want to talk a bit about what's helped you grow. I know we've talked about experiences, but what else has really helped you grow and develop as a leader, do you think?
The growth comes, I think, partly from moving around and doing different things, right? So I've always worked in a sort of fixed income environment. Nowadays, I work in a part of the fixed income industry that sits within investment banking rather than, that's true, I think, for most of the banks across global Wall Street, that's the way capital markets is set up to be part of banking. But moving around within that ecosystem, right? Doing securitization, doing structuring, doing a lot of client-facing work, managing risk, just having more touch points and more sources of experience is what helps you to grow. Some people will go on one career track and kind of do the same thing and gradually move up their whole careers. And there's nothing wrong with that. But I think if you want to talk about growth, the ability to move around a little bit, I would always give people the advice, sometime 2, 3, 4, 5 years into your career, make a change. It doesn't need to be a big change, but make a change just so you see something a little bit different and have enough experience in that first thing that you were doing that it's still relevant, right? I mean, if you change after 6 months, then you never really did the first thing, right? So that's why I say at least 2 years. And if you can do that every few years, that's how you can really move up in an organization because you have experience across various different aspects of it. It makes you more valuable. So I do think that there's a lot to be said for making changes to your role or your jurisdiction or the sector that you work in if you're a coverage banker.
Great share. I think versatility comes up a lot and it's so true, right? If you're broadening your experiences, your knowledge base and how valuable you are to an organization, then it's going to help you grow as a leader. The show, you listen to the show. I'm grateful for that. And
Great.
I'm going to ask what podcasts, what materials, readers are often leaders. What's really had an impact on you in that area?
There's so many books and so many podcasts. I could tell you what let me start with the books actually, because I think that everybody who works in this industry should have read certain books. And there's actually a long list and I can't think of all of the good ones now, but I think of the 3 sort of top ones, my top picks for reading. One is Liar's Poker. You might say, that's a fixed income. I work in banking. No, everybody should read Liar's Poker. Everybody. I read it over 20 years ago now that triggered me deciding to come into the industry. Before that, I was planning to be a car designer. So Liar's Poker is one. Genius Failed is about the failure of a firm called Long-Term Capital Management. It was hugely important around the turn of the century. That is a great book. And then Barbarians at the Gate, which is more about traditional investment banking, mergers and acquisitions. And I think most people listening to these podcasts have probably read 1, 2, or all of those books. Everybody should read all of them. Also anything by Michael Lewis. There's a lot of good stuff out there. And we talked earlier in the show about building synthetic memory and knowing what's happened I meant that in a sort of narrower sense of what's happened to the clients, right? What did they do last year? What did they do the year before? What companies merged to form the company that's your client? What deals were done in the sector that you work in? But if you think about industry as a whole, you read those books, that's going to give you a sense of how we got where we are. When I say we, the investment banking industry. Bloomberg on Bloomberg is another one. And then you have a lot of the memoirs and the biographies of people who have been hugely successful. Podcasts, this one, of course, is number one. You're doing a great job with this. Many congratulations. Something that I listen to every week is the All In podcast. I think this is a major podcast in the world, but sometimes I encounter people that haven't heard of it. It's for Silicon Valley guys sitting around. They talk tech, they talk politics, they talk business, they talk economics. They have some guests on from time to time. Fantastic podcast. I can't miss it. And then Bloomberg is doing a lot of good podcasts now. There's a fun column called Money Stuff on Bloomberg. And the guy who writes that has a podcast started relatively recently. That's another weekly listen for me.
Yeah, it's interesting because I've sat down with probably about 20 leaders now and for the podcast and interviewed them, and the first two books you mentioned haven't come up. So they're new ones for the audience, I would imagine, certainly from our perspective, recommendation. So we'll pop them in the show notes. Barbarians at the Gate comes up a lot, of course. Definitely noted that one a few times. But thanks for all the other materials, and we'll pop those in the show notes so everyone can get hold of them if they want to listen or read. And I think we're going to come towards the end of our session. It's flown by. But a couple of questions before we wrap up. What do you consider the highlight of your career? There's been a few for sure. What do you consider the highlight though?
I can't pick just one. I did talk about a deal that made a major impact to the P&L of the trading floor when I was an associate. So that was a highlight. That's a long time ago now. I'm fortunate to be living a highlight right now as I have joined a firm that I'm just really excited about the growth trajectory and the resources that we have and the mindset of the people and the growth that we're doing in terms of not just growing the client base and we're growing the bank's balance sheet as well, also growing the team, right? And we're getting to hire some great people. And we're finding that when we tell the story about what the firm is doing, people are really excited to join. And it's still a small enough team that we really all work together, right? It's not siloed in the same way that you would often get in big banks. Just yesterday, I was off seeing a former colleague, part of the Credit Suisse alumni network, who's a prospective client. And I went with the guy who's responsible for M&A for that sector coverage, the guy who's responsible for corporate banking and transaction banking, and a coverage colleague of mine. We just went and talked about what we're doing, and the client was excited. And so this is a highlight, right?
I feel that again, it's come up a lot. I really feel your excitement. So I'm so pleased for you. And for those that want to get in touch, obviously your LinkedIn will be in the show notes. You should reach out to Piers if you're interested in joining, because he's a great guy. Last question. What would you tell your younger self, knowing what you know today?
So I knew you were going to ask this question because you ask it in every show. And I struggle a little bit in terms of thinking about how to answer this because I know myself, I know my own strengths and weaknesses. So the advice that I would give to myself might differ a lot from the advice I might give to others. I think one thing I would tell younger me is recognize when you have an advantage and press it. The way we make progress is by taking action when the time is right. And I hesitate to give that advice to everyone because I see a lot of younger people trying to press advantages that they don't actually have. That can be detrimental. So I guess the emphasis on the advice to other people is recognize when you have an advantage, recognize when you don't. And when you do, then you should press it.
Love that. What a great way to finish the show. And hey, Piers, I know how busy you are, so I really appreciate you taking the time out of your schedule. It was a great episode. I know there's going to be a ton of great insight for everyone that they're going to appreciate. So thanks so much for your time. Appreciate it.
It's been a lot of fun. Thank you, Pete.
This episode was brought to you by Outram, the global leaders in the financial deal gift, awards and recognition space. So if you need any assistance in these areas, don't be afraid to hit me or the team up. I really hope you enjoyed today's episode. Thanks for joining us. And until next time, best of luck on your growth journey.